level I spoke about Monday, valued over 100 pips. Let's friendly Aussie. Aussie's breaking out of the head and shoulders bottom formation. Talked about a continuation, little pullback in the end before another run that happened. So a lot of nice little scalps going into Monday from last week's call, and then Monday, if you missed the moves, the initial rally in the pound and the guppy, you had a chance to buy it. Euro yen gave you time to get long for the target at 130. So some spot on stuff. Continuation move up in crude. There was a 38% retracement in USD CAD that worked for 300 pips as well. So my advice is to protect those profits into the Fed today. We have the Fed in about 2 hours, but as usual, let's start with the dollar. As you can see, another sell-off held. Does seem to be weakening a bit, though. I would actually like to see a dollar rally to sell into. And maybe a lot of people are expecting hawkishness, dovishness out of Yellen because of the carnage in equity markets in China and crude crashing, etc. So actually the surprise would be the Fed not having a dovish statement and another rally in the dollar that I think could again, it just doesn't look to have the structure to really be a launching pad for an acceleration to the upside. I still favor decline. Something like this from here around the par level could take us down to 96.5 or so. But I think that there'll be one more push up in the dollar. The euro I thought could rally back to 109. That also has been accomplished. For right now, I favor pound longs because of a formation. We have a bit of an ascending triangle I'm going to show you in a few minutes. And the Aussie, I've been talking about buying breaks in Aussie for the last 2-3 weeks, and Aussie looks to be attempting a breakout here. Talked about gold going to 1120. That's manifesting today. Take a quick look at the gold, which was my rationale for not wanting to be bearish Aussie like the rest of the world. That's your gold. Fed contract. A lot of people looking for sales here in the gold between here and 1140 now. But we got up to the 1120 area. We're starting to stall out a little bit. I'd be booking profits in the gold here. A lot of people talking sharply higher numbers, but perhaps better entries lower. Yeah, we could spike if the dollar sells off to 1130-ish, maybe 1140, but I've been constructive for well over 5-6 weeks, talking 1120. Here we are. Your long gold, take at least half off. It's not a reverse signal. If you've been long Aussie into the Fed over the last week or two, take it. There's always another opportunity, always another trade. We don't want to give up profits in 5 minutes. It took us weeks to accumulate. I guarantee you the market will be here after the Fed. Make sure your profits are still there by taking them. It's not a profit till you take it. So if you want to continue to ride them, take at least half off and tighten up your stops to break even, and try and guess lucky on the Fed and the market reaction initially to the Fed. I was talking about that it was crazy to be short crude at the $26 level or so. Crude looks like it's going to get back to that $38 level, $37 level that I've been talking about. Here you go. Let's go to daily nearest. They tried to sell it off Monday and it came back. It's right back at resistance here in the crude. So just a measured move from 28 to 32 is going to give us 36 to 38. And Canada's going to remain under pressure until we get there. So looking for at least 36. Doubling something like this is about $4.50. Could take us maybe even to this resistance up around 38. From there we'll reassess and also be considering longs in USD CAD. Taking a look at the S&Ps. I was talking about a recovery up towards 1950. I still think that's a possibility. A little inside day. Now it's pushing to the upside. So market's anticipating, it looks like it's going to like what the Fed's going to do. So in the next couple of days, we could be here at this 1950, 1960 level, which means US dollar yen could still recover. I'm still thinking there's potential for 120, 121, and open to the long shot that the S&P's bottom and rally into the springtime. So here's your TLT treasuries, which would come down if the US dollar yen is going to keep going up, and is showing topping signals from last week. Took out these highs, so this still favors the long side of US dollar yen, which last Wednesday gave the buy recommendation at 116.30. Trade is still working if you stayed with it. I'd go the door on some of that too, just in case there is some dollar weakness that sets in. So the outside markets that I correlate the USD CAD to crude bouncing, USD CAD coming off quite dramatically, in fact. Gold going up, which meant Aussie USD was going to catch a bid. That's happened as well. The pound, talked about that and buying a pullback. All the crosses I was constructive on, talked about 130 in Euro Yen and had plenty of time to trade it. I think we're only about 50 pips away or so from that objective. And if you didn't buy the pound last week, there was a nice pullback, 61.8 back to buy it. I gave you the point on Monday, and I think there's more left, but I don't really recommend you risking a lot into the Fed. Any questions on any of the outside market correlations that I've covered so far? Okay, very well. Let's go to the euro. So when I talked about the euro, I thought we could rally back. I said 108.80, 109. That's what happened. Euro just doesn't seem to have the form that I'm ready to get long for. I still think that there's a chance I might see this 107 level being taken out. Maybe we head down under 107 for a better buying opportunity. Last week before the NFP, was it the NFP last week? It was the ECB, and I said buy a break on the ECB. It worked for a few candles, and then when I came in here Monday, I said I just didn't like that there was no follow through, but we could rally back towards 109. I favored the downside, but it's a no trade for me right now. Really, look at this. What do you have? Sideways, ranges, sideways, sideways for months since a high here in mid-December. Really trading in close to 300-point range. Still think there's potential for us to trade down and retest these lows, which come in under 107 in the weeks ahead for a better buying opportunity down here before we get a much better dollar rally. But this was something I had more conviction on. So last week I talked about this buy, and I said here we were Monday that we get a 61.8% retrace. Look at that. This took out 61.8 by a few pips. So if you bought it here, I was talking about these levels at 41.80. You had 170 pips in a matter of a day or so. So this is the formation I'm considering here now in the pound, which really doesn't jive with what I'm seeing in the euro. But if crude has a little bit more left, perhaps cable does too. Let me just clean up the chart here. I'm going to clean it all up. So we kind of have a flat top here. So this is the formation I see. I'd label it an ascending triangle right here. Here's your flat top right here. And here's your ascending line right here. And then we'll talk about some fibs. You know, I thought that we could rally back to 45 or so. So here's our formation. If the Fed comes out and we hold this line at 42.20, which is about another 20 pips lower, it could be a buying opportunity because it's a nice formation. It actually measures 40.80, call it 280. Would give us 46.40 on a breakout over 360, 46.40. And if you see 46.40, if I just take this directional move here on a fib basis, was something I was talking about last week. Let's take it from this high to this low. So coincidentally, the 50% level is going to come in at 46.6. So that's a level. If it really gets going, perhaps a retrace all the way back towards 48, but that's my view on the pound. You have to have risk management stops under 41.70. There was no divergence here on the daily. I just wanted to point out that we have a nice little ascending triangle developing. It could break down. If it breaks down, you get out of the way. Give me a Y if you're with us. If you want to be conservative, you just wait for the first candle to close over this level, and then here you go. Up towards the 200 moving average would be the measure of this formation. So you don't have to be a hero. You know, we should know after the Fed. We should get some determination. Sometimes you could get spikes outside of a formation and back in it, but your line in the sand, if you're bearish, is right here at 40.60 for a continuation move to above the 146 handle, definitely above the 145 handle. Give me a Y if you're with me on cable and on euro. EG is trying to rally, but so far just looking kind of like an ABC. I think it'd be a natural place for euro pound to pull back to, and that's another reason why I favor pound over euro, would be to come back to the breakout. So your breakout points here around 74.20. So I would favor selling rallies, and euro pound maybe up here against this high, or a pullback into the breakout. And it's going to be very important for the bulls to hold this head and shoulders breakout, which is something I talked about on the weeklies down here, right shoulder. So it would be a natural retest for it to come back down towards 420, 440. So scalping looks to me to be more reasonable from the short side. Perhaps we get some type of test of this first. This could be A, this could be B, and we get a C up towards the 76, 75 level. Just clean out some stops above this high before we head back down to the major breakout. So if I'm negative on euro pound, looking for a test of the breakout, my preferred longs are the pound. My preferred shorts are the euro. Give me a Y if you're with me. Going into the Fed. US dollar yen was a home, talked about it at the bottom. A week ago last Wednesday we were here. And I said last Monday that a little retrace. Here we were Monday. And we did have a little retrace. Minimum retrace, 38%. Making new highs and confirming. My view when I talked to you last Wednesday was that we could retrace all the way back down to the breakdown, and that could take us up to 121, 120 to 169. And the long shot trade is that we're having a decent week. We have the reversal week. We're getting follow through in the end. So initially, this is going to be your problem up here, 22, 23. We start clearing again. This would imply new highs in stock indices into the spring or summer, and that would take the yen up towards 133. We'll take it a step at a time. 20.5 to 22 was a great trade, especially since it was recommended about 30, 40 pips off the low that we had on the crash on Monday down here. Right here was the pullback during the webinar. So nothing wrong with taking partial profits here. You have about 270, 280 pips. And then looking for potential break to buy into again. But again, at this point, doing nothing wrong. Next resistance in around 1949. So we just got this little shallow pullback, which was much shallower than the pound, right? Pound pulled back 61.8 here. Yen hardly pulled back at all. It's got your little 61.8% retrace right here at the 38% level here on the end, right there, and the 50-day confluence. Give me a Y if you're with me. Still bullish the yen. I'm not recommending shorting the yen. I wouldn't even consider shorting the yen until we're well above the 120 handle. To me, it looks pretty constructive if I want to be real bullish here. You have 116. Okay, that's 280. That's going to give you 2160, 2160. How about that? 2180. So draw that line in. That's going to be your first important sell zone in the end. And if you're long term, your place to take profits. I was talking about buying euro yen, looking for a 130 target. I was talking about it before the spike down that we had on the ECB. So we're only about 70 pips away from this target. You know, if you did it any time, even for our webinar Monday, you got long at 28, you have 120 pips. Take half off and tighten up your stops under the 28.23, which should be break even for you. I said the same thing in the guppy. You know, talked about the guppy before the initial launch. We had this pullback to the 50% retrace level. So I said looking for buys around 67. So from here, I gave 240 points left. Still looks okay to me. I talked about the potential that eventually we were going to see 175. It looks like a lot, but after this type of drubbing, it really isn't a lot. It's more of just a normal retrace. But again, you had two winning trades. You had this one. You had the trading suggestion to buy the pullback in the guppy, just like to buy the pullback in the pound. And it came in right at fib levels I mentioned on Monday. So you don't have to be a hero. If you bought it on this candle, you got long around 167, trading 940, put it in the bank. Or put at least half in the bank and trail your stop to break even in front of the Fed. I still think there's some more upside. Again, this having a little bit of a look of a head and shoulders type formation, left shoulder, head, right shoulder, neckline right here. So we're getting a lot of bottoming formations, like in the pound and here in the guppy. And it measures pretty good, right? So we just take it from the low, call it 64. That's 6. So that's going to take us up to 75, 76. That's where I think the guppy's going. Can't rule out that we could pull back and to the 50 moving at 67 again, but acting pretty powerful to me. So there's another ascending triangle, just like you have in the pound, only with the yen being strong, it's added jet fuel to the trade. You know, you have to hold 68.28. So you have this ascending triangle in the pound. You have a ascending triangle in the guppy, and I just wanted to show you the potential of a head and shoulders bottom. I have this line drawn in Aussie. Was talking about buying it down here. Talked about buying pullbacks because of my bullishness in gold, and looks like we're cracking this neckline here. So looks like we have some more upside in the Aussie. And again, just like the yen, we're almost at targets around 71.48. Although this head and shoulders, if I'm a pure technician, I'm drawing a line in here. Right here, okay? Which we're just starting to break out of, and that's a pretty move with the low being 68.25, and the neckline coming in, call it 220. So 220 from 70.40 gives you 72.60. So that would take you up around this area, 72.60. Actually, there. So more ahead, I'd be taking profits here and seeing what happens, because you know what? My trading warrior brothers and sisters, you can throw away your darts for a little while in the Fed. So I know a lot of people want to try and predict the Fed and guess what the Fed's going to do, but what we've done, we didn't miss anything being flat for the ECB. It gave us plenty of trading opportunities, right? We, talked about buying the yen. We talked about buying the break in the euro. We talked about the top in Canada and the bottom in crude coming. So we didn't have to take that risk on the ECB, and it wasn't the wildest ECB, and this may not be the wildest Fed meeting. I believe there's not even a press conference, but there have been some great trades over the last several sessions, and don't get hubris when you're in the zone and you're making money. Sometimes people get sloppy because they go there playing with the house money. It's not the house money. It's your money. Protect it. So let's get over to the Aussie yen cross. I was bullish Aussie yen. Look at that. Called this third drive. Again, this kind of has a look of a head and shoulders, only with the jet fuel of the yen being there. Kind of draw a horizontal line here. But we're just starting to break out of this ascending triangle. I wouldn't chase it here, but we're talking about it down here on a potential third drive with the nice divergence, with the nice little pullback that I talked about that could happen into basically last night, and here we go. And this formation, as long as we continue to close above 83.30, 83.40, has a nice measured move as well. Call it 83.5. Call it 430. Going to take you up to 87.70 if we get this continuation in trend. And here's a moving average at 86.35. So here's the previous low, 86. So it looks like 86, 87 coming. Have to protect yourself under today's lows. So you didn't get hurt. In fact, you did well on every cross, on the guppy, on the euro yen, and the Aussie yen from last week. So ring the register in front of the Fed, and perhaps we'll buying opportunities to come in, setting up for next week. Give me a Y if you're with me. So here's the Canada, and I bet I was that rubber band in Canada stretched further than I thought it would. I was getting bearish right on here, 42.40 or so. And we finally got the top up here. We're headed into some support here around 140. I think it's still crowded enough trade. And then on Monday, I said, look to sell any kind of rebound. I said we could go 43 to 44. And again, it was a very weak retrace compared to the pound retrace 61.8. We only, at the yen and Canada, only retraced 38%. So if you probed it at 43, you're doing okay, book it. Okay, 43, last trade, you have another 250 pips, although crude still looks like we're going higher. You never know. We could generate a rally and get one more rally back towards 44. But the action definitely is negative. Perhaps we're going all the way back down to 138 before we get the big rally. But we'll have other opportunities If you took the advice and sold a reflex rally, a 38% retracement, I was saying either 38 or 50. I thought maybe 44. If you took it, book it. Tell me why if you're with me. So we also talked about the Euro CAD. And the Euro CAD, I said, could have some type of rally. It was another anemic rally. I thought we might get back to 56 or so. I drew these again. Another 38% rally, and here we are. So if you took that, I'd book this too, even though I think we're heading down toward 50 level. You never know, we could get a surprise. This too looks like a head and shoulders top. So we have head and shoulders bottoms, we have head and shoulders tops, and this looks pretty vulnerable. You know, this was a 750 pip decline. So if we have just something like this, 1, 2, 3, and this is 4, I expect next target to target these lows down here, right around the 49.5. But I still would not do anything in the whole intent. But if we get rallies back towards the highs we had the other day, or even a little bit higher, 6, that would be a more appealing level for me. Euro Aussie looks the same. It's got a head and shoulders look to it. We did have the bounce. I drew this neckline Monday. This was a better bounce. You know, we rallied back to 57. This looks pretty negative to me. It's a big count. I went shorted in the hole, but I don't even think we'll get back to these highs. And it measures pretty good from 53.5. Measures all the way back down towards 46. At least back to this moving average of 51 is 46 down here. So to me, this looks like a head and shoulders top developing. We're sitting on a neckline. Maybe we'll get one more rally to get short into that scenario. Any questions on Euro CAD, Euro Aussie, the crosses? We've had, you know, kind of sideways action in the Kiwi. In fact, I was right about talking about that the Aussie Kiwi was going to be a buy, that I expected the Aussie to outperform. That's exactly what's been happening so far. It's kind of a ranging market, but I showed you the weekly that kind of had the look of a head and shoulders. Here we are now up against some resistance. I call it a neutral now. Very much this could be it. But I look at this Aussie Kiwi, and we've had the bounce. It really is not that impressive. It almost looks corrected. So if you took this signal down here at 106, just pop it out. We were talking about it down here. And I was thinking of that there might be a weekly head and shoulders bottom developing. It still could be the shoulder, but I'm not impressed with the action. So overall, flatten out, book profits, tighten up stops to break even. I would even recommend stops. There's nothing wrong with that. That if the market moves against you on a red number, if you decide to be courageous and hold your positions into it, better to be stopped out with a profit than stopped out BE. And remember, we're always going to miss trades, but relax. There's always another trade, always another train, always another bus around the corner. So with that, feel I did another good job for you guys this week, talking about pullbacks that you could have bought in the pound and the guppy. This week, being long, the Aussie has been rewarding as well. The yen from the panic low last Wednesday, again, another good call. So let's just enjoy our profits and let the market do whatever it wants to do today. And I guarantee by the time I'm back with you on Monday, we're going to have a fresh setup in many different markets and things to do afterwards. I gave you some levels to consider after the Fed, and I wish everyone a lot of success after the Fed. Don't play roulette and predict it. React to the reaction. And good hunting. Thank you, RoboForex, for letting me share my ideas and methods. And I'll see everyone back here again on Monday. Good hunting, Raging Warrior.